Mike Chiruka from the Law Offices of Mike Chiruka. This afternoon we're going to talk about recent developments from the Pennsylvania Legislature regarding corporate income taxes in the state. Despite the governor's promise and the legislature's agreement that the state's not competitive in many areas, steps have been taken recently that are going to make us even less competitive in the near term. The first step that they took was they took away what's called the Delaware loophole. For years, Pennsylvania corporations have taken intangible assets and other assets, put them in Delaware, which does not have a corporate income tax, and then have charged deductions against Pennsylvania income to manage or otherwise take advantage of those assets out of state. The legislature has heard for years that this is somehow an unfair advantage to use this technique, and finally they have taken a step to close it. The action that they've taken under the new act is that they have disallowed deductions to Delaware corporations that are affiliated with Pennsylvania corporations when the only assets or the only expenses are associated with intangible assets that have been transferred to Delaware. So this will be a major shift in planning for many corporations in Pennsylvania, and we have very little lead time in which to make changes in order to take steps to counteract whatever the Act contains, the provisions in the Act. The second step that was taken is, despite promises that the capital stock tax and franchise tax would expire at the end of last year, the legislature has deemed fit to extend that for 2 more years. So we have a capital stock and franchise tax extension. They have declining rates over the next 2 years, and again we have a promise that it will expire by 2016. But given past practice of the legislature, I don't think that promise, we can hold them to that, and we're going to have to continue to plan to deal with the capital stock and franchise tax for Pennsylvania corporations. Those of you that deal with LLCs in particular, the capital stock tax has always been a pain in the background, and that will continue at least for the next 2 years as you deal in this area. The third step is actually a little bit of a bonus. Many corporations have built up net operating losses in recent years, and the legislature has increased the amount of the net operating losses that will be able to be used. Currently, it's $3 million or 20% of the net operating loss that can be used in any particular year. Next year, that will be increased to $4 million and 25%. And then the year after that, it'll then go to $5 million or 30% that we'll be able to use in a particular tax year. So that's actually a positive for those corporations that have been racking up losses either in the recession or the years immediately after the recession. So this will give them a bit of a tax break and help their cash flow as they go forward. So while much of the emphasis in recent months has been on what's happening at the federal government, Pennsylvania again has been busy, and if you are in the corporate tax area or an individual corporation is affected in these areas, keep an eye out for these changes. And if you have any questions regarding the recent changes, please feel free to give us a call at 717-232-4701 or take a look at our website at www.chirukalaw.com.